Hi, folks. Today is Friday, September 11th, 2020. This is the end-of-day review for the live trading room for Options Moneymaker. And basically what we do throughout the trading day is we focus on the four primary technical signals that are built into the adaptive entry system. News cycle trading and analytics has created these signals which basically take a complex, complicated set of indicators in the background and present them to the trader simply with a vertical green or vertical red bar. Vertical green bar means you want to go long. If you're an options trader, you're going to buy a call. If you're a futures trader, you're going long. Vertical red bar means if you're an options trader, you're buying a put. If you're a futures trader, you're going to go short. The labels, I won't get into teaching those labels right now, but each of them represents a method. And we have some traders who choose to trade some of the methods, and other traders will trade all of the methods. There are four distinct methods that are presented as a signal on the adaptive entry system software. So we're pretty excited about representing news cycle trading here at Options Moneymaker and using this system of trading in our live trading room, primarily focused on the NASDAQ 100 futures using a 5-minute chart. All right, so that's how we get to end of day. But then at the end of day, what we do is we evaluate our overall performance. And I track throughout the day with my team's help what the overall performance is, primarily starting at 7 a.m. Eastern. We have a fair number of people who like to jump in and trade futures prior to the regular market session. It works with their work schedule, their business life, and they're able to trade and then go on about their day. But we track throughout the entire day all the way to about 5:30 Eastern time. So when we look at the daily summary, which is summarizing the total point production for the day in a variety of categories, we think in terms of each point on the NASDAQ 100 futures is worth $20. Each point is worth $20. We have winning days and we have losing days. And because we track a variety of categories, there's several different time frames, time ranges that we track. There's several different methods, whether we're trading all of the signals or whether we're only trading momentum signals, or further off to the right, only trend bias and continuation signals. So we're tracking a variety of methods, which exposes our community of traders to a ton of information that helps them decide when the most opportune time for them to trade is and what they could expect in terms of profit and point production. So the two categories that we track then to profile in our personal trading plan are trading from 9:30 to noon every day, taking all of the signals, all four signals, and then also trading from 7 a.m. Eastern time to 4 p.m. Eastern, trading the trend bias plus signals as well as the continuation signals. And when I say track, what I mean is we translate those performance results at the end of each day into our personal trading plan. Now, the purpose of the personal trading plan is to provide a framework for each trader to understand what their run rate is. So run rate is a term I used to use back in my old corporate days, and it says, we're spending money here, we're taking in money there, but if we continue to operate at certain run rates, the averages that you establish over a period of time, we could project out into the future what our end result would be for a year. So applying the same concept to trading, if you were to establish a run rate, meaning you've got a series of winning days, you've got some losing days, within those days you have both winning and losing trades, if you are able to establish a run rate, you can project out into the future, if you were to continue with that run rate, what your income would be over the course of 12 months. We created the trading plan specifically for that purpose. Each trader can use it at the close of each day, each trading day. They can plug in their results, which could be positive or minus, and then instead of being emotional about their positive results being a state of euphoria or their negative results being a state of sadness or depression, you can actually look at your overall results in a non-emotional perspective and see what your run rate is and what that run rate projects for your income over the course of 12 months. So I'm going to go to our category that measures from 9:30 to noon. Now yesterday we did not do an end of day review, so I'm going to actually do both days today. And so the 9:30 to noon yesterday, and I'm taking these numbers, I'm not going to flip back and forth, but I'm taking these numbers off of the daily summary here. These two numbers and these two numbers. We're going to plug in all four numbers. So the daily performance yesterday, 9:30 to noon, we lost 15 points. I will say this week has been a little bit of a challenge. We've had a couple of losing days this week, and yet overall we're still actually in good shape, and you're going to see what I mean by that. So 15 points lost yesterday times $20 a point is $300, and we're trading 3 contracts. I'll explain the contracts in just a minute. So we're going to put a minus 900 in here. Get the spreadsheet to wake up here. And then the total number of trades that we did yesterday were 11, and there's 3 contracts per trade, so there'd be 33 contracts that we traded. And then today, we actually lost 30 points today. So before you become too alarmed, let me show you what this looks like for a 12-month projection. So that's minus $600 per contract today, and we're trading 3 contracts, so it's minus $1,800. And we did 15 trades today, so 45 contracts, 3 contracts per trade. Okay, so what we're going to do here now is we're going to go up to the top of our spreadsheet, and we're going to take a look at these two numbers right here and here. The first one is showing us what the average profit is per day on our winning days. That is our actual run rate, 27.77. So right here is where I want to enter now going forward for the remaining balance of the 12 months. So we're through basically 10 weeks. And so what's the run rate going to be that I'm going to forecast for the remaining 42 weeks? It's going to be based on winning at 27.77 points per day. My average losing day is 26.97. And we actually plan on losing at a rate of about 1 day per week. That's on an average. We are actually slightly ahead of that right now. So I actually think this is a great example. Rather than always showing positive results, we've had 2 back-to-back losing days, 2 days out of 4 trading days in this shortened abbreviated holiday week. Well, we're actually about 6 losing days ahead of our plan, and we do have a plan for losing days. We should always have a plan for losing trades and losing days. And so the 26.97 is not just an average of the losing days, it also takes into account the ratio of losing days to weeks. And if it exceeds that plan of approximately 1 losing day per week, we take that into account. So our prior forecast that we had just done on Wednesday was based on winning at the rate of 27.77 points per day and losing at the rate of 22.78 points per day. But our losing rate has increased, so I'm going to adjust my future forecast, minus 26 0.97. So now I have what I consider to be a realistic forecast for a 12-month period. The first 10 weeks are all locked. Those aren't going to change. The first 10 weeks are all already coded in. We know what those are. They're locked at the number of contracts that we traded. 3 contracts is the maximum number of contracts we've been trading. And with 3 contracts being our max, at these individual run rates, our 12-month forecasted income is about $242,800. So when I say, you know, the losing days don't have a significant and dramatic effect, it's because we have some history in here. You can see we had a whole series of winning days, and then we had a couple of losing days, and we have a whole series of winning days. And we've gotten into a period here where we're kind of alternating with a few losses and a few wins, but we know what our run rate is. We know what our current run rate is. And if we are able to project out forward that same run rate and operate at that same level going forward, then this is what our potential income could be. Well, here's the reality. Your numbers are going to be whatever your numbers are at the end of each trading day. And if this profitable average day decreases, you're going to have to decrease your forecast. If your losing day forecast increases, the average run rate increases, you're going to have to increase your forecast for losing days. But you've got a lot of room here to have some negative impact on the current run rates and still do quite well. I'm just going to make this up, but if I put in 20 points, if it dropped 7 points on an average per day, you still have $164,000 a year potential income. Now, the reason I think those are good income levels is because we're starting this whole thing 10 weeks ago, which is $5,000. So to be able to go from $5,000 to even $164,000, I think is a pretty solid number. Right now, the projection, with no guarantee, but the projection is just under $243,000. Now, how else can you influence that number? The most important thing you have to do every day is trade by following a set of rules and taking your profits or losses however they may come. The second most important thing you do every day is you plug your performance results into your personal trading plan so that you see what your income potential is. The third thing that you can do then is you can adjust to the degree that you're comfortable the total number of contracts that you will trade, the maximum number of contracts that you would trade over a 12-month period on a per trade basis. Now, we always start with one contract, and the program here, the personal trading plan, will grow your contracts and scale your contracts according to the following. We started with $5,000, and we're saying within the program, we're placing a setting that says we will not allocate more than 10% of the balance of the account to contracts. Each contract, when you're trading futures at the broker that we trade at, requires $500. So if I'm going to trade 2 contracts, I need to allocate $1,000, and if I want that 1,000 to be no more than 10% of the balance of the account, then I have to have a minimum of $10,000 in the account. So that's a limiter right there. That's a governor that says we will scale contracts for you based on 10% of the balance of the account. Now, if I took off this this limiter, the second limiter, which is capping it out at 3 contracts, the number of contracts would scale to a much bigger number, okay? So if I just said, I was willing to trade up to 50 contracts, well, the program is going to scale for you up to 50 contracts, and it's going to be based simply on no more than 10% of the balance of the account. So you've got limiter number 1, that's a risk limiter, and limiter number 2 is mostly for your personal confidence and comfort level in trading. Now, obviously, the more contracts you raise that limit to, the higher your potential income is over the course of 12 months. So I'm going to leave that at 3. I think it's a very reasonable number based on our current run rate. And having started with $5,000, it gives us a pretty healthy objective. And so this is a category for people who are only trading from 9:30 to noon. And you know you're going to have winning days and you're going to have losing days. What you do is you plug your performance into your trading plan and just allow the trading plan to help you see what your potential is over the course of 12 months. Now let's go to our other category. Our other category assumes that we're trading from 7 a.m. to 4 p.m. Eastern. We have a lot of people that enjoy doing that. And taking only the trend bias trades and the continuation trades. So not taking momentum or consensus signals. So yesterday, now it's interesting back-to-back days here. Yesterday ended up being our worst performing day in the 64 trading days that we have now logged into our spreadsheet. And we're just continuing to gather data. It's 64 days. We did a ton of back testing prior to rolling out the adaptive entry system to our live trading room audience and community. And then since then, we've been actually tracking in real time every single trade during the day. We had the worst performance yesterday. We actually lost 56.25 points, but stay tuned because if you're thinking the guy just said he lost in 2 days in one category, now he just lost 1 day in another category, just stay tuned, okay? So 56.25 times $20 a point, and we're trading 3 contracts. So we have a minus $3,375. Now, what I actually like about this, I don't like losses, but what I actually like about it is we now know what our current level of lowest performance is. We also know what our current level of highest performance is. We had a day not that long ago that we did 125 points of positive performance. So there's a balance, and we can look at a variety of ways. We can look at averages. We could take out what are the tails, you know, the lowest day and the highest day, and see what the average and the mean is in there. But we have a tremendous amount of data and information that allows us to evaluate what our reasonable anticipated performance should be. We did 12 trades, 3 contracts a trade, so 36 contracts. All right, so today we actually finished positive 75 points, positive 75 points times $20 a point times 3 contracts. So we're up $4,500. And today we did 17 trades times 3 contracts, so we had 51 contracts. Okay, so back-to-back days, we had a really nice, strong positive day, and we had our lowest performing day in 63 trading days, which is over 3 months. So I'm going to go through the same exercise here. Go up here, and we're going to take a look at what is our, first of all, I'm going to look over here, say, you know what, we're actually right on pace. We have 10 losing days in about 10 weeks. We actually have 10 weeks. The calc is shortening us from 10 weeks because of the holiday this week, but we have 10 weeks that we've completed, and we have 10 losing days. So we're right on plan in terms of the frequency of losing days. And then our losing day average is 23.1 points. So I'm going to increase my losing day forecast to minus 23.1. And our average winning day for our winning days, which is averaging about 4 out of every 5 trading days, is 35.13. So I'm going to increase that to 35.13. And I have a 3 contract max here. I know I can increase the number of contracts or decrease the number of contracts, but whatever I set as a maximum number of contracts will first be limited by being no more than 10% of the balance of the account. So 3 contracts gives us about a $356,000 a year income. So when I look at that, and yesterday, I didn't like the fact that we were down and had our biggest losing day so far in 3 months. But here's the reality. It's a $356,000 income if I continue at the same run rate that I've established, which includes that big winning day of several days ago, a couple weeks ago, and the biggest losing day now that we've had. So I use the trading plan and encourage our traders to use the trading plan to avoid being focused or too preoccupied on today, and look instead at the overall averages and understand where those averages could lead you to overall performance. And remember, this $356,000 is the potential, certainly not guaranteed. We only have 10 of 52 weeks behind us, but that's a potential income based on having started with $5,000 and then just compounding our profits based on taking profits every day and continuing to trade every day and recording them here in the spreadsheet in the personal trading plan. One last thing I want to comment about. Two last things. One of the things that I'm tracking and have not incorporated it into performance yet. Today we had 75 points of positive performance, but we had a few trades. Well, let me go back to the other category. We were down 7-4 all signals. We were up 35 points. Now we don't track this one in a personal trading plan, but it is the optimum performing category we have when we're looking at time frames and point production and number of losing trades. So that particular category, 7-4, despite the fact that we had losing day yesterday, we've only had 5 negative days. We've only had 5 negative days out of 64 trading days. That's the best performing category we have. I think that that's a very, very strong number. Now, here's the point I wanted to make. If I take a look at that and I look at the number of full stop outs we have when we're trading NASDAQ futures and we're using a 20-point protective stop, we had several stop outs. But the market volatility has really picked up in the last week and a half. And in fact, CNBC today said that this week was the worst week that the NASDAQ 100 had since March. So, that's kind of an interesting data point when we look at our performance. How are we doing? Well, overall, we're doing very well. But when I look at these 20-point stop outs, there were quite a few of them. So what I'm looking at is, have we reached a point in the time in our volatility in the NASDAQ 100 where we need to increase our protective stop from maybe 20 points to 30 points? And I just simply make a note over here. I'm just gathering data right now, but I just simply made a note over here of the frequency at which, well, if we'd used 30, we still would have gotten stopped out at 30, or if we'd used 30, we would not have gotten stopped out for 30, but instead we would have ended up with a profit on the trade. So without going through all the details of that today, although we finished 35 points positive from 7-4 and taking all signals, today, using a 30-point stop and assuming a 10-point profit target, which is our normal profit target anyway, we would have ended up another 75 points favorable. So here's the takeaway from that. That is hindsight, but the takeaway is, as we gather that data, which we commit to our trading community that we work on gathering and assessing and analyzing data, as we gather that data and we see more consistency with that, we may widen our protective stop to 30 points, knowing that when we get stopped out, it'll be 10 points more than we're taking right now, but that we have enough experience rate that says overall we would be more favorable. So 75 points more favorable. I know we had a day that, yeah, back here we were 80 points more favorable. I think the day after that we were 5 points less favorable, so I'd be willing to tolerate that. So I'm still working on gathering that data, but that's kind of an interesting data point. That basically, had we used a 30-point stop today in the all category trading from 7 to 4, we'd be about 110 points today. That's a really strong day. But I think we're presenting this conservatively. We're not factoring those things in. We're not even factoring in the fact that when we lock in 5 points manually and it continues to run, maybe doesn't hit 10, but we could have manually locked in 6 or 7 or 8. We're not doing that. If we lock in 5 and it takes us out at 5, even though it went to 8 or 9, we take 5 points. So what we're trying to do is to track and record and report a very conservative approach to trading the adaptive entry system and then translating that into the personal trading plan. So the 30-point stop might be something that we want to pay attention to. And the last thing that I have to say today is I encourage people every single day, especially on days like today where it's Friday, the end of a pretty volatile week, that earlier in the day, it's very likely that many people, in fact, I know of many people who are strongly positive in terms of their performance. And had they kept trading the rest of the day, they may likely have given back a good portion of that profit. At 10 o'clock this morning, 1/2 hour into the regular market session, we had people in our community telling us they were done for the day, they'd met their goal for the day. Well, without a personal trading plan, which is what this tool is, you don't really know what your goal is. In this case, if I was coming to trading brand new, market was just opening, I said, okay, my goal today is about 35 points. That's what I'm looking for. If I hit 35 points, you know, in the first half hour or hour of the regular market session, or even before the regular market session opens when I'm trading futures, why do I want to keep trading? I'm on pace. I am on pace to make $356,000, having started with $5,000. If I keep trading, I run the risk of giving back and then ending up down for the day. I also know that it's an emotional thing to overcome because if I keep trading, I might make more. But you have to decide when is enough enough? What is the answer to that question for you personally? If you're happy with the projected income, stick to your 35 points. If you're not happy with the projected income, my counsel would be stick with the 35 points and increase your contracts by one contract because you know it's not going to increment by another contract until there is at least enough in the account for that 4 contracts to be no more than 10% of the balance of the account. Increase it to 5 contracts if you want to. Whatever you want. The most difficult part of this equation is achieving your goal every day. And if you achieve your goal and you do it early in the day, take the rest of the day and go enjoy doing something that you really enjoy doing, knowing with confidence that you, at least at this point in time, at this moment, you are on pace to hit a $350,000 income, or in the other category, maybe a $240,000 income. But you can always influence that by the number of contracts. We love trading the adaptive entry system on behalf of New Cycle Trading and Analytics. The team over there is a team of very intelligent programmers who are also traders, and we've just really enjoyed our collaboration with New Cycle Trading. And by being able to confidently trade every day and take the signals that are presented to us and then take our performance at the end of each day and put it into the trading plan, it's the best combination of factors. It simplifies our trading, gives us kind of a known when is enough enough, and tells us where we're headed over the course of a year. And if it doesn't meet our expectations, then we've got plenty of time to adjust. Either come back for training, participate in the live trading room, let us help you understand the signals better, And just know that we're always working in the background, always in a state of collaboration with New Cycle Trading and in refining these signals and trying to make them the strongest, the best, most profitable, productive tool you could ever want for trading. So thank you for being here. Hope you had a great week. Hope you had a great day today. And we'll be back on Monday for additional trading.